Hi guys, welcome back to the channel. My name is Dave, and today I want to start talking about ETFs that pay you every single month. And I'm going to break this down into a multitude of categories because I realize a bunch of people are attracted to this idea of kind of getting this paycheck every single month. So we'll start breaking it down. So today it's straight stock ETFs that pay you every single month. But coming up, we'll talk about REIT ETFs, bond ETFs, covered call ETFs, and alternatives as well that give you that paycheck every single month. So if that is what you're looking for, please stick around. So today I have 4 different ETFs to show you, and they pay a dividend to you every single month. And all they have in these are stocks. They own stocks. They pay out a dividend, whatever they receive, every single month. Now, for doing that, they tend to have a little bit of a higher expense ratio versus a similar product that might pay you out every single quarter. So as we go through this, I want to present to you also some alternatives that would be similar but pay you out every single quarter. So if you can afford to wait a whole quarter, you might pick that product. But I do understand the draw that some people have to getting paid every single month, just like a paycheck from a job. So with that said, let's get started. So as I present these, I'm going to go from low yield to high yield. At the very end, we're going to look at a chart and compare all of them together to see which one might be best for our portfolio. But I want to start with DIA. This is the Spider Dow Jones Industrial Average ETF. And this one's been around for a long time, and it has those Dow 30 stocks in this ETF that are supposed to represent a lot of the economic activity in the United States as picked by the Wall Street Journal. So, like I said, it's been around for a long time, and since inception back in 1998, as far as the Dow 30 goes, that's returned about 8.7%. So you're going to get nice growth with this, along with a 1.91% yield. You can get that paid out every single month. So this is a great, what I always like to say, this is a great anchor for a portfolio, and it will pay you a little bit every single month if that is something that you're looking for. Expense ratio is 0.16%. Again, 1.91% yield annually, paid every single month, about $28 billion in assets. So a decent sized fund as well. Now, everybody's saying sell, sell, sell. That's kind of interesting to me. I think we've talked enough. I'm a little bearish at the moment. The bulls aren't saying anything. The bears are saying something on Seeking Alpha, but we've all been wrong before. But if you want a dollar cost average into something like this, not a bad way to go, in my opinion, because it's the Dow 30. Now, as far as the holdings breakdown, you got financials, healthcare, technology, industrials lead the way, and the top 10 holdings you can see. These are going to be a solid 30 stocks that are going to be in your, like United Health Group, Goldman Sachs, Home Depot, McDonald's, Caterpillar, Microsoft, Amgen, Visa, Boeing, Honeywell. Roll out the top 10. You can also see that it's had nice dividend growth. So hey, this is a great product if you want to buy and get a little bit every single month. Again, it would be a great anchor. So the next ETF on my list is DHS. This is the Wisdom Tree U.S. High Dividend Fund, and this one ranks companies by dividend yield. Then it looks for average daily trading volumes of at least 200 million. So well-diversified fund. But as we jump into this one, we're going to see that, yes, it's still a monthly payer, but we are paying a little bit more. 0.38% or 38 basis points. That means $38 per $10,000 that you invest. Yield's also gone up to about 3.59%. You can see the one-year chart there. Not too impressive, but not a lot of things have been that impressive over the last year. Now, if we scroll down and we look at the holdings breakdown, we're going to see financials, energy, utilities, healthcare, and consumer defensive, followed by technology down there at 6%. But what's actually in this are great U.S. companies. Now, there are some that I probably wouldn't pick to put in my own portfolio, but overall, we got a good mix here. We got Exxon, AbbVie, Chevron, Philip Morris, Pfizer, Altria, Cisco, AT&T, Morgan Stanley, and IBM round out the top 10. So overall, a good mix of products in this fund. But we'll take a look at the end, and again, we'll compare them all together to see how this one stacks up against these 4 versus the S&P 500. And you can see that there's been some nice dividend growth there as well. So the next ETF on my list is SPHD. This is the Invesco S&P 500 High Dividend Low Volatility ETF. And that's exactly what it does. It looks for stocks that pay high dividends but offer low volatility. So again, expense ratio is 0.3%. Not terrible, not great. Pays every single month. And it's yielding 3.92%. So again, we're creeping up there near 4%. Let's scroll down really quick. Let's look and see where they invest. And it looks like the top sectors are real estate, utilities, consumer defensive, financials, and consumer cyclical. Now, what's in this? Again, we see Altria, more cigarettes, AT&T, which was in the last one, Verizon, Simon Property Group, So we know we got REITs as well: Kinder Morgan, Dow, International Paper, Boston Properties, Walgreen Boots Alliance, and Williams Companies. So that rounds out the top 10, and altogether we have 52 holdings in this particular fund. So again, in the end, we'll compare them all together. Now we scroll down too, we can kind of see all of these have offered a little bit of dividend growth, although it's stagnated a little bit over the last few years for this particular fund. So my final product for today is CID. We're going to look outside the United States now. This is the Victory Shares International High Dividend Volatility ETF. And this invests in non-US companies. And it screens for profitability, so you must have positive earnings across the last 12 months to be in this fund. And it selects the largest 500 stocks by market cap, and then it weights those stocks based on risk and volatility. So this one does have the highest expense ratio of anything we've talked about at 4.45%, but it is also yielding the most at 5.29%. And again, this is paying every single month, and it's a relatively small fund with only $17 million in assets. But you're not even going to recognize a lot of these companies that are in here. There's 103 altogether, and pretty well balanced, with Swisscom being 1.83% as the largest. So let's focus on the sectors here. We got financials, communications, industrials, basic materials, and utilities are the top 5. So again, looking outside the United States, I think it's essential that we, as we build out a portfolio, especially if we're looking for yield and everything else, that we have some balance and we look outside the U.S. So this is my non-U.S. monthly paying stock ETF. So now let's compare those 4 ETFs versus the S&P 500, which on this chart I'm representing with SPY. And let's look at it over a 5-year period. It's been hectic over the last 5 years, right? Everybody knows this. And we can see that SPY's done pretty well. It's outperformed all of them. DIA there in the blue is second, DHS is third, SPHD fourth, and International CID has not fared so well over the last 5 years. Now that is the price return. If we add in total return, add all those dividends back in, you're going to see DIA is kind of caught up. They're almost neck and neck. And then we have DHS, SPHD, and CID. Now they've all got a positive return over those 5 years, but obviously International is kind of it's struggling a little bit there to keep up with the rest of them. The other ones have performed fairly well, right, in comparison over the last 5 years. So these 4 pay you every single month, but they definitely are not the highest yielding ETFs that are out there. We'll get into some of those later. But they do offer a nice solid basket of stocks that should offer you some growth. Now, if you were to invest $100,000, that's always the question, what would I get every single month? Well, it is going to vary month to month, but on average with DIA, you're going to get $159 or about 2 sushi dinners. DHS, you're going to get $299 or about 3 sushi dinners. That's all I eat, sushi, obviously. SPHD, you're going to get 4 sushi dinners or $326. And then CID, which was the worst performer of the group, will pay you about $440 every single month or about 5 sushi dinners, but take into consideration the performance and how you might mix and match these together. So as I mentioned earlier, there are plenty of alternatives, and if you can hear all that noise in the background, that's because I have a 16-year-old having a birthday party, and I'm trying to do this right now. Just trying to ignore them. They don't want anything to do with me anyway. But alternatives to these products, if you're willing to wait a whole quarter to get your dividend, would be some things like this. And I do own some SPYD a little bit. I have a little bit of HDV as well in a little portfolio. And then I've got quite a bit of SCHD, which we've talked a lot about, number of times on this channel. That's a great product too. So if you're willing to expand out and go out to a whole quarter, here are some great ones that you can consider as well. Now, if you like this kind of content, again, I'm going to be going into more depth and a lot of other areas when it comes to monthly paying ETFs. So come along for the ride, like and subscribe. And if you have any questions, ask down below. Really appreciate you watching. Have a great night. I'm going to go have a party with the 6-year-olds, but they're going to kick me out. We'll see you next time.